Welcome to the DSMR. This briefing highlights where the smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutions are exiting positions. And when smart money is accumulating, retail investors are selling and institutions are building positions. This data, including charts, graphs, and the ability to create bottoming signals, are available to you on bottomfinders.com. Head over after the video to create a free profile. And with that, let's start the daily briefing. In the communication services sector, we are seeing a clear division in institutional strategy. Smart money has officially entered the markdown phase within the entertainment industry, aggressively pushing prices lower towards a discount zone to generate supply and wash out retail participants. Conversely, institutional investors have transitioned into a markup phase for interactive media and services, driving upward price action to cultivate retail demand and maximize profit potential. A unified defensive wave is sweeping through the consumer discretionary sector. Smart money has fully entered the markdown phase across distributors, diversified consumer services, hotels, restaurants, and leisure, and household durables. Institutional operators are systematically driving prices down towards discount territory, creating a lower price action environment designed to chase away retail investors. Defensive posturing continues into consumer staples, where smart money is firmly anchored in the markdown phase. Institutional forces are actively steering prices downward into the beverage, food products, personal care industries, is seeking a more favorable discount zone while suppressing retail enthusiasm through declining price action. Energy across the board is experiencing a powerful bullish push. Smart money has entered a markup phase for both energy equipment and services, as well as oil, gas, and consumable fuels. Institutions are heavily lifting prices towards a highly profitable zone, utilizing strong upward momentum to attract retail buying interest. The financial sector presents a highly complex, multi-phase institutional narrative. Smart money is currently operating in the markdown phase for both banks and consumer finance, exerting downward pressure to find a discount floor. Meanwhile, a major structural shift is underway in financial services and mortgage REITs, where institutional investors have entered a heavily accumulated phase, quietly absorbing shares from the supply pool and buying directly from retail investors who are exiting their position. Healthcare is exhibiting a distinct split between distribution and discount hunting. Smart money has entered a markdown phase for healthcare equipment and supplies, dragging prices lower to shake out weak hands. Simultaneously, institutions have entered the markup phase for healthcare providers and services, alongside life sciences tools and services, advancing prices upward to generate retail demand. A tale of two strategies is unfolding in the industrial sector. Smart money has entered the markup phase for aerospace and defense, as well as air freight and logistics, aggressively driving prices higher to maximize profitable returns. On the flip side, institutions have entered a markdown phase for building products, consumer services and supplies, and ground transportation, orchestrating a lower price action to test a deeper discount zone. The technology sector is witnessing a sweeping, highly coordinated institutional campaign. Smart money has aggressively entered the markup phase across communication services, IT services, semiconductors, software and hardware technology, storage, and peripherals. Across all five major industries, institutions are driving prices vertically towards a profitable zone, capitalizing on rising price action to draw retail investors into the market. Deep value hunting defines the current action in materials sector. Smart money has entered a clear accumulation phase within paper and forest products. Institutional investors are capitalizing on retail capitulation, steadily vacuuming up available shares from the supply pool as retail participants exit their position. Real estate is experiencing a dual front tactical play. Smart money has entered the markup phase for hotel and REITs, industrial REITs, retail REITs, pressing valuation upward towards a profitable target zone. In contrast, institutional capital has entered the markdown phase for real estate management and development, steering prices lower to establish a distinct discount zone. The utility sector is flashing signs of intense long-term backing. Smart money is steadily working the markdown phase in electric utilities and multi-utilities, letting prices drift lower to secure a discount. However, the headline story belongs to water utilities, where institutional investors have entered a major accumulation phase, aggressively buying up supply from exiting retail investors to build out significant core position. In closing remarks, the goal in investing should be to move with smart money and not against it. And our goal is to find where that smart money is. An ideal bottom for going long is where the smart money has exhausted accumulation, and those are the dark green lines. Those are the bottoms we look for at Bottom Finders. We will include the text in the video description. And if you find this report helpful, show us some love by clicking like and subscribe, and we'll see you at the next one.